Kaspa went down by 72% in just 50 days.
A massive crash.
But it also went up a little bit, right? More than 25,000% in a bit over 1 year. This video is not about the fundamentals of Kaspa. For that, we've already got another video. We talked about tokenomics, decentralization, developer activity, etc. In this video, we are going to talk about timing Kaspa, when to buy in and when to sell, how to avoid those 72% drops that sometimes happen. And no, we are not going to draw random lines on charts over here. What we're going to do is we are going to use statistics or backtests, simulations of buying and selling the Kaspa token, approaches that historically in Kaspa's lifetime work the best. And we assume that psychology doesn't change that much over time and that we can similarly use the approaches that used to work well also in the future. It's an approach that massively outperformed just buying and holding. What we've got here at the bottom is the price of Kaspa. So that's in turquoise. And in white, we've got the back-tested performance of that strategy. And the strategy isn't even complicated. We simply use moving averages, but we use the best moving averages. The idea is that we buy in whenever the price is above the moving average, and we bet on falling prices whenever the price is below the moving average. So we ride the wave up over here, we bet on falling prices over here, we ride the wave up here again, and we bet on falling prices here again. But the issue with that is we don't know what's the best duration for that moving average. Should we take the 14-day moving average? Should we take the 30-day moving average? Or how about the 50-day? We simply don't know, right? We just have to guess. But that's where statistics and backtests come to the rescue. We can avoid the majority of those massive crashes if we have the right moving average. Let me quickly show you the Excel sheet. So the data starts on the 1st of June 2022. Then we calculate the simple moving average and the exponential moving average. We then have a little macro sheet over here where we can enter how much capital we start with, what's our trading fee, are we only betting on rising prices or are we also betting on falling prices? And when we set this all up, I start this now with 1,000 and 0.2 trading fees. Then we can iterate over all of those moving averages and let this macro sheet calculate. And this takes a while because this backtests 52 moving averages, but we are done. And this is the result. So on the x-axis, we've got the duration of the moving average. On the y-axis, we've got the annualized performance. In other words, we backtested moving averages from the 2-day all the way to the 52-day. So that's 50 simulations of buying and selling. All those different moving averages had been backtested. And we did this for the SMA, the simple moving average, and the EMA, the exponential moving average. And as the reference point here in black, we've got the HODL line. What would we have gotten if we just bought and held the Kaspa token over that time? And there's two really great outliers, right? Buying and holding would have given us 5,280% annualized, but trading according to the 18-day exponential moving average would have given us 18,095% annualized, and the 20-day simple moving average would have given us 15,789% per annum, right? Those two data points over here. And so this is the chart with those moving averages, the SMA in turquoise, the EMA in red. So according to that strategy, we would have bought on the 6th of September. We only buy and sell at the end of the day, UTC time zone, midnight. That's when we decide do we buy or sell, depending on where the price relative to the moving averages is. But we are buying over here, and until today, we would be up by 21% roughly. It also shows us how close we are to a potential turnaround. If we only fall below 45.8 cents roughly, we close a day below this. There are some wicks already below this, right? So don't trade within the day, only trade when the day closes. Once we close a day below that, which is only a drop of like 2% or so, not much for a volatile crypto like Kaspa. If we do that, things could be potentially short-term bearish again. In the past, crosses like this resulted in further drops of 14% or more. Now, why do I like these kind of approaches so much? These very complex approaches of backtesting, trying to find out what's the best indicator. The reason is this brings objectivity into the whole game. You don't just arbitrarily pick the 20-day. You don't just arbitrarily say the 50-day is the best. You have the numbers that back up what works the best. And it's especially fascinating that this works with a lot of altcoins, not just Kaspa. Pretty much for any altcoin, we've got a moving average that works better than just buying and holding. Most of the time, the majority of moving averages outperform buying and holding. That's not the case for Kaspa, right? For Kaspa, we have to be more selective. We have to be above 14 days in duration and below 28 days roughly, otherwise we underperform. But very often we see most of the performances of the moving averages being above just buying and holding. Now I've backtested many moving averages. And there's even a Telegram channel alerting us whenever one of the best moving averages get crossed. There's also a website with all of the Excel sheets with those moving averages. So you can use those Excel sheets and use them for your own backtest. There's also videos on how to do this, right? Tutorial videos. That's all part of premium, so that does cost money. But if you don't want to pay money, there's also a free Telegram. Simply click the link down below.